Alright, so hey, what is up YouTube? Welcome back to the channel. Today's stream is going to be focused on providing my charting levels, like key levels, my zones for supply and demand, and all that fun stuff. So I figured I could do the stream, and then hopefully I can use the stream as a way to just reference people to come to this stream specifically for like how I chart, just because one I've been trying to do, it just keeps not working out well. But we'll see. Maybe I'll still do a side video, specifically like a long form video about charting. But we're going to try to make this as quick as possible. So I'm just going to just jump right into it. I know people are slowly starting to come into the stream, which is really cool. Welcome in, everyone. But yeah, I'm going to just start just knuckling into it. So I do supply and demand, and I do support and resistance. I'm also a user of key levels, and these are all the time frames that I use when it comes to key levels, and then the 4-hour and lower is going to be for supply and demand. The way that I do my supply and demand levels is going to be depending if it's a supply or a demand. So I'll first start off with that, and then we'll go into actually charting everything out. So let's go into the 4-hour first, and we're just going to pick a random one from before. Right here, this is a good one. So a very quick example to explain how I draw out my zones. I will take the opening of the demand basing candle here, this black candle right here, the opening of it, and I'll drag it down to whichever wick of the current and the following candle is lowest. So the wick on the second candle is lower, so I'm going to go ahead and drag it there. And then you can either go into the settings of the rectangle and you could extend it to the right. I don't personally like to do that because as time goes on, when they are hit multiple times or they are broken through, then it's no longer valid and just makes the chart look very, very claustrophobic and crazy. So for me, I just manually extend it over to where I want it to be. I do have templates set up here as well. So 4-hour demand, it's literally just a little green box with a middle black line and then the little text in size 10 font. So very basic, that's how you do a demand level. I'm going to remove it now. And then to show off a supply level, it's going to be the opposite. So right here will be a supply level. In this case, it's going to be from the opening of the blue candle, which is a bullish candle, because you see the previous candle price went down, it was bearish, it closed at the bottom, but then it reopened down here. So we'll do the opening of the bullish candle, and then same idea, you're going to drag it to whichever wick is the tallest. So the current candle and the following one, the current one is currently, or it is the taller of the two. So from there, I'm just going to drag it across. And the same idea, I have the template for it, but I have it as a little red box, middle black line, size 10 font, listed as 4HR for 4-hour. There's some times where I change the name where I'm like H4 or the M5 versus the 5M. Whatever floats your boat, you get the idea, but that is how I draw the zone itself. And then now we have to get into the nitty gritty of what is a good zone in my opinion, which we're going to talk about in just a moment. So first, what I'm going to do to start off the actual charting session in itself is I am going to mark out my key levels. So for key levels, I do start off with the weekly and then I make my way down for the weekly, daily, 4-hour, and the 1-hour time frame only. Just all preference. I just personally like to use those ones for different reasons. The weekly is very clear because the weekly is going to give you the ultimatum, like the very strong levels, whether it's the all-time high of a certain place or it's going to be obviously the previous week, or like really strong resistance that you can see played out over the course of multiple days. So that's why I think the weekly is very great. The daily, same idea. It kind of gives you just support and resistance of particular areas, and I like it because it also grabs multiple days in it. So, or it could be used for multiple times. The 4-hour and the 1-hour, I am starting to use it more for like quote unquote intraday trading. So for the 4-hour, you'll see that it might be tapped more times than the daily or more times than the weekly. The 1-hour is definitely an area where it can show you, in my opinion, where price might start ranging between. And we had this happen like multiple times, I would say within the last like 3 weeks of trading, where my H1 and my H4 levels were good balance levels as well as places for price to range between, and so it's been nice to be able to use them to my advantage. So that is why I use those time frames. And now let's go into marking up the chart in itself. So starting off with the weekly, we can clearly tell that our weekly is our all-time high right up here. So I'm going to drag her up, place her right there. And that's the first weekly level. It's all-time high and weekly. Our next potential weekly would be actually right around here where our H4 is. And I've been having this one down here since, oh, that's not valid right here, December. But I've been having this one here for a bit of time, honestly. I'm still going to leave it because it is, strong resistance previously, and now it is support, which we had only one bounce off of, or maybe even two if I were to go ahead and move up that said weekly a bit higher to here. So we did find some bounce off of it right around there. And then I am going to add a weekly right here in the middle between all of this. So this used to be resistance, now it's becoming a bit support. So I'm going to go ahead and add her right there. And then we'll adjust that accordingly if that weekly is not valid, because I have the daily and the H4 there to consider as well. So that's it. Weekly is very fast. Daily, now I want to see very clear signs of support and resistance where we have multiple tries, because with the daily we have more data that goes into it, more of the time for price to move. So in this case, if I come down here, we don't really have much except for this, but that can be, I guess, counted into the weekly idea. So this is why I kind of like the daily better than the weekly, in my honest opinion, because the daily shows much more clarity when it comes to finding where there is actual support and resistance. So we have a basing candle here, which shows there's also support bouncing off of it. So instead, I'm going to go ahead and make this as a daily, and we're going to remove the weekly. Okay, now let's move up a little bit more. Here we have this kind of resistance area all together, and then here as well, and then this is a retest of that said resistance. So for this daily here, I'm going to go ahead and remove it. And so far we have the H4 printed here. I'm going to mark it out as the daily, and then when I move into the H4, I want to see how it looks like to determine if keeping this daily is worth it to be on the chart. So it'd be like right here, give or take. This is the daily. Okay, cool. And then let me actually delete the other previous areas that I had marked, because we do not need them anymore. Okay, sweet. So there's that daily. We do have a potential daily here, which also lines up with our support resistance of the H2 time frame. Resistance, 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 support now. So I'm going to go ahead and put up the daily here and see also again if the H4 is more worth it compared to the daily. Yeah, and this one, there's not much candles kind of pushing into this said level, so I'm not going to use the daily for it. I'm going to jump into the 4 hour now. And I do like with the H4, there's just more candles to show more, again, just clarity. That's my favorite word. Just shows more clarity with what price is actually doing compared to the daily or the weekly if you're looking at multiple. So yeah, with the H4, start from the top down. Yeah, right here. So the H4 is much more cleaner. It shows us exactly like what's going on. The daily also makes a lot of sense right here to keep it. So I'm going to go ahead and keep the daily, just given that it pours into last week and it shows a lot of resistance here previously. So we'll go like this. So it was from the 22nd roughly. So I'll keep it as a daily just for now, and then we can always adjust it to H4 later if we need to. But I'm going to keep it there for now. Okay, for the top, nothing, nothing. We have consolidation points here, resistance points here, but we break. It's pretty clear that's a nice break on the H4 idea. Okay, here was a resistance, then it became support, support, resistance, support again. So I'm going to go ahead and mark it as an H4 here. Drag it up. Okay, H4. And now let's go into the lower part. If there's anything else for us to mark. I know we had all of this marked before. I remember I was live streaming and I had shown all this. I've also shared my charts when I had all this marked up. But given that we are no longer within like August and September and we've already kind of broken past these levels, we could always come back down. But that's what I'm going to use supply and demand for. For key levels, for my intraday trading, I don't think I need to go any lower than probably this weekly right here. So we'll keep it as is. So we're going to jump into the 1 hour for our final key levels to mark out. And we can see here more even better compared to the 4, how like there's this resistance here with the basing resistance here. We have consolidation here, consolidation, break, and a failed breakout to come back underneath it. Again, having resistance here and now having a support. So this looks more clear to me for a potential area of where we can find range, where a price can bounce off of, and it just looks more readable, I guess. I don't know if readable is the right word. I don't want to keep saying clear because clear and clarity I feel like is my common word I'll be using on this video, but it's fine. So we're going to put her right there. We're going to go H1. So keep in mind that these key levels, they are not picture perfect as far as price is going to just tap it and immediately go. These key levels are just areas of interest where I'm like, okay, I know that in the past price had moved into said level and price reacted a certain way. In this case, we obviously had a fake out, but all the other times resistance broke through it, became resistance again, resistance for a little bit before it broke through and failed, resistance again. So it's been tested many times, and that's why I feel like with H1s, as I said earlier, they're great for like rangings, and that's why I like them for just an honest reaction of how price might be, and it's a clear level for me where I could expect some type of reaction or some type of range, in particularly the H1s. So there's that, and then this could be, no, I mean, resistance, but yeah, resistance and then support. I wonder if we could have a potential rejection here to come back to the daily. I think for the next few days I'll leave it just to see if it is a viable place to leave a key level. But we'll adjust it if need be, again, going into supply and demand. So, anywho, there's that. And then let's go into our final level down here. So we do already have the H4 grabbing these guys. This is all consolidation in between support, resistance here, consolidation, support, resistance here, support here. So this whole middle section is like almost like support and resistance kind of teeter-totter. So I'm going to expect again like maybe some range in between these two big areas or these two key levels. So I'm not going to mark out the H1 here, but it's clear like how price is looking when it comes within these two levels. All right, and I think that's it because I said I wasn't going to mark down here any further for key levels anyways. So that's key level charting. And then now I'm going to pour into the supply and demand zone, starting off with the 4 hour, and then we're going to do from like the top and then to bottom. So we'll start with supply on the 4 hour, and then we'll do the demand on the 4 hour. Just because supply, there's not really much to even mark out. So this can be removed. This could be removed now because we had clear break and retest of it already. So H4, this is an obvious broken supply, right? It is something worth keeping for the meanwhile on the H4 because of it being a higher time frame, strong supply level, supposed to be a strong supply. We only had 1, 2, 3 pushes into it and a complete breakthrough. So it is, maybe strong is not the right word. It is just a level for me to keep note of maybe over the next couple of days, but I'm very okay with also removing it when I see that it's not viable anymore. It's kind of like, I think at that point it becomes a little bit more discretionary. Like, okay, you know, we've been tapping into it multiple times. It's not really that serious. So it's not really a supply, but it could be an area of interest for support or resistance. In this case, it was resistance. We broke through it. We failed to keep above it. So now it's becoming resistance again. And we've only done it 1, 2, 3 times. So maybe we can do it one more time for an actual real reaction. So that's why I'm going to keep it. Okay, so going back into supply, there's no more other supplies. So now let's go into demand. I'm going to remove this for now. So we do have this demand down here, which does bounce off pretty nicely off the H4. So I'm going to go ahead and pull it until this upcoming, let's do upcoming Friday, 7 a.m. because it's kind of far out. We do have this guy, but it lines up well with the key level, so we'll leave it alone. And we do have this one, which is already marked out, so we'll continue to keep it. That one was broken. And there's our weekly. So that's it for the 4-hour frame. And then let's jump into the 3-hour supply, potentially. It's an ugly type of supply candle because of the long wick on this side. For me, I'm trying to, before it would be where I wouldn't want a full wick to kind of eat into this candle, because then it doesn't give me as much confidence within that said supply or demand zone if the wick is very long prior or right before the following candle. But for me, what I'm trying to test a little bit is if we do have this long wick and if it's still a valid area. So I still primarily, like majority of the time, do it where it's like this, where it's a small wick and it's barely eating into the following candle. I prefer this much more than something like this. But in case, I don't have any levels marked up for higher up as we go all-time highs, you know, it's kind of like forward testing in a way to see if it's even a worthy enough level to mark out or zone to mark out. So there's nothing really on the supply for me to mark. As far as demand goes, we do have this basing candle right here. I'm going to remove this guy. And what is this? That's the 2-hour, which we did use right here. So that's can be taken off at this point because it's broken through and we had to bounce off of it. So it's been used. I'll probably mark it as a support level. But other than that, I mean, we could potentially have this 3-hour right here. But this is tripping me out. I'm not sure how I feel about the bearish candle being so low compared to the bullish candle, where the bullish candle starts up here. I don't normally use the 3-hour very often. It's something I've been incorporating, I'll say, within for sure the last month of my trading. Normally I do the 4, 2, 1, the 30 and the 15. You can go back in all my videos, you can see most of them have been like that. But I'm trying to give it another go because, hey, sometimes other time frames have what other time frames don't have. So it always gives like another sense of this is a potential level. This also does line up pretty well with the daily, so that helps. It's something to consider. So we'll keep it for now. And then down here, we do have this 3-hour here. So here, I'm marking it out as I explained. I'm still forward testing this idea of this long wick that pushes into it. It's a weird one for me to know if this is something I would want to use. I normally would not. So I'm just going to test the theory and see how it works when we do have a reaction off of it. And if I ever have a reaction, I'll take note of it. So for now, I'm going to leave it and then we'll go from there. And then that's it for the 3-hour. I think I got them all. Oh, right here, actually, this is a 3-hour right here. Instead, maybe you can use this instead of the other one. Three-hour demand. I'll use that one instead. We'll remove it if there's a 2-hour. I prefer the 2-hour versus the 3. Okay, so starting off with the 2 on the supply level side. So we do have a small little demand right here. What color is this other candle? That's a bullish or bearish candle. So we don't have a full base rally, but we do have a 2-hour that has been created. So I will go ahead and mark it out right here, 2-hour. And instead of doing Friday, I'm going to do this up until Wednesday. And then instead of the 3-hour, I'm going to mark up the 2 because I do like the 2 better than the 3. All preference, honestly, it's all preference. So there you go. And then we also have this 2 down here, which lines up with our 4. So instead of just doing another box, I'm going to go ahead and mark it as a line. And we'll do support and resistance. Well, support in this case. I'm going to actually do supply and demand, H2, because it's not really an SNR yet. It's still S&D because we haven't tapped into it. So there you go. There's S and D. This is a good basing right here. Pulling lower. Good basing right here. I like this guy instead of the 3. Remove that and mark out the 2, which lines up also with our 4 hour. I like that a lot. So go like this, 2 hour demand. So the 3 hour and the 45 minute, I've kind of been using it as like my last line of defense, if you will, my last time frame that I would consider to really want to mark up on the charts if I have nothing else. So that's why I have it on there. But again, it's only been a month of like trying to incorporate it, but it has not been my go-to every single time. So, okay, and then we're down to the weekly. So nothing really special here. I mean, come into the daily key, that's cool. We do have this, it's broken through, broken through, broken through. This has a long wick on the 2 right here, but it is a nice test. I'm not going to mark it to keep it on, I just want to show you, but it is a nice test. So, okay, that's our 2 hour demands. Now let's jump into the 1 hour frame. And then let's see if there's any 1 hour supplies. We do have a 1 hour supply. Beautiful. So we're going from the open to the highest wick of the current and the following candle, which the current one is higher. So I'm going to mark it out like that. 1 hour supply. And drag it until Wednesday, 7 a.m. Okay, so that's the only supply we have so far. Now let's see if there's any demands. We do have this demand. It is holding. So we are within a demand right now. One hour demand. And I'll leave this till Tuesday only. When is this? 108 to 89. So that'll be very interesting for us to go through. Kind of wondering if this is not worth to mark anymore. I will. It depends on what tomorrow looks like. Okay. 2 hour, 1 hour. Here is a 1 hour within the 4, so this could be a good target area for like a smaller zone within a bigger zone, because you can see this 4 hour is ginormous, right? It's 762 all the way down to 632. So that's over 100 points for a zone. So now if we do go ahead and mark out a tinier zone within it, not only could be an area of interest for potential bounce play, or it could be a potential interest area for an exit of a short position. Not saying that this is picture perfect, not saying this is where you need to exit and enter positions only, but for me it's a smaller defined zone of 745 to 720. That's like 25 points within a 100 plus point zone. So yeah, we're going to mark it out as a 1 hour demand within it. Nothing down here. And then nothing here. I mean, the 1 hour is smaller right here, but that's okay. We do have a rally base and a rally on this guy, so this could be a 1 hour, but I'm gonna leave it alone, and then that's it. So that's our 1 hours. Go back up. I'm not gonna mark out any 45s because I already have a bunch of 45, or I have a bunch of levels already. H1 is already marked out, so I don't need to mark a 45-minute supply here. I can use my key level instead. And let's go into the 30. There is a gap here. That is interesting. We have a gap from close on Friday and then reopened on Sunday. So let me mark that out actually. So it doesn't show that in all the the time frames. So I'm glad we went into the 30. Pull that over. Tuesday. And then gap. Gorgeous. So she is prepared for 11 a.m. Let's bring it down to 9:30 gap. And this one we'll pull it into also 9:30. Okay, awesome. So those are both prepared. Now to the 15, this would be like straight up intraday right here. We have a 15-minute area here. 15 minutes supply. And that's it. We have a demand that has been tapped into already, but we're not trading, so it's not not necessary. So we'll just leave that alone. So that is how my chart is going to look. Let me save it. That's how I mark out and find my key levels. That's how I mark out and find my supply and demand zones, and how I determine which would be a decent zone depending on the way that the current candle is with its wick, as well as the following candle. If you just take another look one more time, the 1 hour supply is a great example. We have a very small candle body with the wick barely even going into that following second candle. So for me, this supply zone is definitely 50% and less. Oops, I'm sorry, that's a fib tool. 50% and less, that's 25 of the next candle. So this is a 25 supply. This is a 58.5 total candle. So that's clearly less than 50%. So I definitely consider this to be a valid supply zone. So I look at that, I'm like, okay, for sure it has to be at least 50%. Like, that makes sense. The wick is not too long down. As I said, I'm forward testing how it looks like with a longer wick, but this is what I pick majority of the time. And then because those two criteria points are met, the third one is that the following candle, for a supply zone, there has to be strong momentum to the downside from that little basing candle where your supply zone would start. For demand, it would be the opposite. So go back into the 4. It would be the opposite. Where's my 4 hour? Right here. So the 4 hours opposite, you'll see that we have the basing candle is on the opposite side instead of the top. It's on the bottom here. So then we want to make sure, again, 50% and less is the preference. Sometimes a little bit more. I've noticed that, especially on lower time frames, like the 5-minute, when I trade the 5-minute supply and demand. Sometimes the 50% isn't always applicable. It's just depending on how you read price action. But in this event, we see that it is 50% and less than the next wick very clearly, and I could show you guys too. It's a big one, but it is 50% and less. So it's a 300 candle. It's 102 for the basing. So we have the bearish candle, small, and then the following candle is going to be a strong momentum candle, and it's going to be more than 50% too, which it does meet those criterias. So that's why this one would be a 4 hour down here, which I actually need to pull that over. There we go. Okay, perfect. There we go. So yeah, that's like the criteria also to how to determine, or at least for me, what I look for to be able to mark out a valid supply or demand zone. And then how I actually do go about charting it is taking it from the open of the candle body, the first candle body, the smaller one, and then dragging it to the longer wick of the current one and the following second candle. And that's it. That's how I do key levels, supply and demand, and determining what works for me. The last piece I will cover is that when a supply or a demand is broken through completely, in my opinion, it does become an area of support or resistance. The reason why I say that is because I think that supply and demand and support and resistance are intertwined in a way. Supply and demand is basically saying there's a bunch of orders in this particular zone that you're drawing out, right? And so with support and resistance, when you have support, that means there's a lot of orders that are supporting the level to keep it from going down. Resistance is the opposite, where there's a lot of orders that are holding the price from going up. And so supply and demand also is that same idea, where when you have a lot of orders in a particular section, demand is this idea that we want price to continue to bounce off of it and move up, and supply is for it to push into that supply and then reject to go lower. So that's why I think they're intertwined in a way, and that's why I convert my S&Ds into SNRs. An example of that would be here. We have that 4 hour previous supply that we completely obliterated. We swept through it the first time at 3 in the morning here on October 6th, this morning pretty much. And then we finally had a closure above it on the following 4 hour candle at 7 a.m. And then by 11 a.m., we are coming back into it. And then by market close, essentially, we are fully underneath it, coming to the next session. So it's already broken through. Like there's no more demand, or sorry, there's no more supply. There's no more orders in a supply zone for it to continue to grab those orders. But it could be an area of interest for resistance because not, well, first it was resistance here, right? Because we broke through, we failed to close above it. So there is resistance because the candle body is closing below, even though we wicked it. Then we broke through and we closed above. So now it's trying to become support. But then we end up closing back underneath it, and now it's becoming quote unquote resistance again. And because it's a higher time frame, there could be some chop. For me, I think there could be some chop. There could be some type of not clean reaction as we start to play around in this area. That's fine. I could be wrong too, but that's what I would imagine, given it's a higher time frame supply zone and it's a higher time frame previous resistance, then support, then resistance level. So yeah, even if I do pour down into the 15-minute time frame too, you can see we had a lot of chop to begin with when we first created it. Resistance, broke above, became support, broke below, became resistance, broke above, became support, still supporting, trying to break, then it broke. So you can see we're kind of like diddling around within this 4-hour previous supply that has now become support and resistance. So that's why I keep it on here as a reminder of why this area was the way it was. And it keeps me on my ground. It just makes sense in my head anyways about how it's connected. And then normally when I find that, hey, we've already been using this a few times, I remove it off. It's not like a concrete amount of times for support and resistance for it to be considered to be broken off. To be honest with you, I kind of just take it off when it's discretion. It's when I think that it's no longer valid anymore. So I hope that answers any potential questions I'll have, because I will be referring people to this particular video in case they ever ask about how do I chart, how do I look for supply and demand zones, how do I find my key zones, how do I read the chart. I will be using this stream in particular for when people have questions, so I'll be directing people here. So if anyone has questions in the chat right now, though, feel free to put it in there. I'm going to answer those right now, and hopefully it would be a question for a future viewer in case they come to this video and they had the same question as you. So let's see. No, okay, no questions. Hey, what's up, Prairie Kid? Happy Monday. Seen all-time highs. I'm looking for 30, 20, 15-minute supply. Yeah, good for you. Honestly, like lower time frame, I believe S&D zones for all-time high makes a lot of sense, because with all-time high, you never really know how high it can go. And with, I think, the way that how volatile the price has been too, Lord knows how high it can continue to go or how low it can eventually drop. At least if we do ever start to crumble and like go bearish, we have demand zones that could be in our favor. But going higher, for sure, like supply zones, it's not as easy, I would say, to find a valid one, because they are created, like, right, they're created, and then you hope that it will hold if it ever pushes the first time. Sadly, this 4-hour right here, you would think and hope that your supply zone works, but it didn't hold it, right? I mean, yeah, on the 4-hour frame, you could see it was a nice rejection. Maybe if you pour down lower, right, we have an initial rejection. You can take a short pullback, second push into it. But at this point, right, it's like your supply zone is not even valid anymore. So yeah, all-time highs is definitely a tricky place to be in, but I do appreciate how you use the lower time frames to figure out your levels too, for supply specifically at all-time highs. But yeah, that's going to be all of my levels. I'm going to go ahead and publish this onto my trading view. As always, let me throw it into the chat for anyone that needs it. Oh, I need to change it to the 15. Okay. Save, publish. This is 10. Oh, that's weird. There we go. I was about to say, it usually never gives me any problems. So there goes support and resistance, supply and demand. I can do another one? I did not know that. We'll do, oh, multiple time frame. There we go. NQ, publish. Awesome. And we're gonna copy this, paste it into there so everyone can see it. And there's that. So yeah, I wanted to go ahead and do this stream because I wanted to not only like hang out with you guys if anyone had anything to talk about. It seems pretty chill tonight, but also because I've been receiving so many comments and questions and messages asking about how do I chart, how do I look at the price, or I'm sorry, how do I look at NASDAQ, how do I prepare, also asking me about my playbooks and my strategy, which I've also shared that in past live streams and on my different written posts. But I wanted to make it very clear here so I can be able to easily direct those individuals to this video for charting specifics and finding key levels, supply and demand, and how I'm kind of like reading what would happen to said levels if they get hit. So I hope this was helpful to everyone out there. Thank you, Prayer Kid. I appreciate you too. But I'm gonna go ahead and wrap it up here. Thank you so much for all of your time and support. And as always, I wish you guys nothing but the best and the most success in all that you do. And I will see you all in the next video or live stream.